This is the briefing for Friday, September 23rd. Well, in last night's briefing, for those who subscribe to the weekly briefings, I talked about the fact that we had reached important support level, this 373, 374 level in the spiders, and you can see that right through here, this area of rotation, this level of support that came in. We reached it, and we reached it at a point of being extremely oversold. So the strategy, as I explained last night for those subscribers, was basically that we had to expect some type of rotation back to the upside. But we closed at the low of the day, which suggested follow through in today's trading. So looking at if the market does this, I'm going to do that, or if the market does that, I'm going to do this. It was pretty evident that the higher probability was we were going to see some type of pause or rotation to work off the oversold condition, the extreme oversold condition. However, it does not preclude the market on a smaller probability of extending its trend. In this case, it was to the downside. The key to that was that watching what happened with breadth, because if we closed at the low of the day, it suggested the market would have gone lower yesterday if it hadn't closed. So we had to anticipate one of those two events happening. And the key to the move to the downside was going to be what happens with market breadth. If we do put in a lower low below yesterday's low, then if market breadth is strengthening, we had to anticipate that that was potentially an exhaustion move, and we were going to see some type of rotation back to the upside. On the other hand, if breadth was weaker than it was in the previous day's trading, then that suggested that potentially we were going to come down and test the June 17th lows. So the lower probability, even though we were anticipating it and ready for it, is exactly what became the higher probability. You can see this was yesterday's low, closing right at the 374 level. We gapped down today and ran down, but as we gapped down at the open, breadth was extremely weak and weaker, much weaker than it was even in yesterday's trading, suggesting that the internals of this move were continuing to be strong to the downside. I should say weak to the downside. So that suggested then that we were going to continue moving lower in today's trading and testing the low from June 17th. Also, if you look at what was happening with the new highs minus new lows, you can see that they were continuing to decline. This market, as it was rotating down in this move here, was becoming weaker and weaker internally, and even in today's trading, this became at an extreme as well. So in looking at the spiders now, we have reached a very important support level in the June 17th lows. Now, volume has ticked up slightly, but volume is still an issue. We're really not seeing anybody puking up their shares. This is just a slow grind to the downside, but it's a very strong move from an internal perspective to the downside. So we reached the point today of being even more extremely oversold, as you can see here. This was yesterday's trading. We were at an extreme level right here, and you can see that going back, and even here when we were much weaker, you can see that we even blew that out of the water today, and especially in the NASDAQ as well. So once again, the strategy is the same thing for Monday that we had coming into today, is that we have to anticipate the higher probability of some type of rotation back to the upside to work off this extreme oversold condition. Also, we are at a point of very important support level that suggests that traders will step back and anticipate or try to decide whether the value is going to be higher or whether value is going to be lower, and whether there's enough strength in this market to take it higher, or whether there's enough weakness in this market to trade through the June 17th low. Now, a couple things here that I think are very important. The market spends most of its time in rotation, and it is fractal. So basically what we've seen here, you can go all the way back here and you can see the rotational pattern that we've had. Then we broke through a breakout here, retest of the breakout, then another rotation back to the upside. So while I haven't got it marked here on this chart, you could actually see this as another rotational pattern similar to this up here. So the question facing us from potentially an intermediate term perspective is this a rotational pattern where we've tested the lower extreme and now we're headed back up potentially to test this high, or the 420 to 430 area? I think that's a lower probability, but I have to keep that in the back of my mind, especially since we had some buying that came in going into the close today. So we have a buying tail in today's trading. Now the internals are extremely weak, so I anticipate the higher probability is we're going to see some type of a pause, work off this oversold condition, and then we're going to break through today's low and the June 17th low. Now, this is speculation on my part, but because of the rotational pattern that we've been in for most of this year, as you can see right through here, if we break today's low and we break the June 17th low, I think we're going to see volume increase higher than it has been, and I think we're potentially going to see much more of an impulsive move than we've seen over the last several days or weeks in this move back to the downside to test those June 17th lows. So I think that if the June 17th lows hold, we're potentially going to continue with some type of rotational pattern. If they do not hold, I think that we're potentially in the process of seeing the market become more impulsive to the downside, and we'll see much lower prices. Now, I want to point out one other thing. I'm talking mostly about the spiders right now, but this also goes for the Qs. Now, you know, I hate to point out head and shoulders tops because they're not head and shoulders tops until they break the neckline, which, you know, I pointed this out and it did break the neckline, and we got a move that was approximately equal from the top of the head to the neckline here down to here. Now, if you look at this in a greater degree time frame, we have another shoulder here, the head, and another shoulder here. And I did some calculations that would project for the spiders, if this is in fact a head and shoulders top, that it would project down to the 345 area for the spiders. You can see today's low was right at the 363 area. So we've got, you know, probably about 20 points to go before we'd see equality between this distance and this distance. Now, I need to qualify this because it doesn't have to reach that point. And as I explained to somebody else today, that when we look at support and resistance levels, we look at projections for pricing, we look at areas. They're not exact points on the chart. Every once in a while, I will hit an exact point. I'll say support comes in at 378, and the market will go right to 378 and bounce off of it, and then I have to qualify in the briefing that was just pure luck. So we look at areas, and as you look at areas, the shorter the time frame, the smaller the area. So you could give it a range of maybe 4 or 5 points. The longer the time frame, the greater the degree of area. So you could give it a much greater time frame, or a much greater area in terms of price development. So going into next week, 374 is the next upside resistance for the spiders, and then above that is going to be this 392 393 area. Most important to all of this is today's low, which is right at the low from June 17th. So breaking that, I believe, and I'm going to be looking for the acceleration of price, volume to increase, and much more impulsive moves to the downside. I think we're going to see potentially greater moves, greater retracements, and a lot more volume coming in as traders and investors begin to, I hate to say it, puke up their positions because once this is broken, longer term, there is just really no significant support level for quite some time. Right now, I'm looking at the 345 level in the spiders. In the Qs, same thing, shoulder, head, shoulder, and then a break of the neckline would project the Qs down to about the 247 level. So we closed right at let me see, I can't see that. We closed right at the 275 level. So, potentially, there's another 30 points in the Qs to the downside for that equality to take place. Once again, a NASDAQ breadth was extremely weak in today's trading. Really surprising based on the weak internals to see how they were even able to rotate it back up today and get this buying tail coming in. You can see it really was not much of a move. This is an hourly chart of the spiders. This is the Qs. So it really wasn't that much of a move, but they did bring it back up. And we are at a point of being extremely oversold at an extremely important support level. So we have to anticipate some type of pause or counter trend rotation. Finally, looking at volume, this is volume from the Fed announcement on Wednesday. Same thing for the NASDAQ. And we did get a tick up in volume. And if you eliminate this day's volume here, you can see that the trend is now beginning to increase. Same thing with the NASDAQ, eliminating this volume spike as a result of the Fed announcement. So looking forward to Monday, the strategy I'm going to develop is that just as I came into today, I took most of my short positions off as they started to rotate it up, mainly because we reached an extreme level in breadth and we are extremely oversold. I left just a small position on in case they do decide to flush it on Monday, but I'm going to be looking and using the same strategy I used today. If we trade through today's low, breadth needs to be extremely weak like it was today. Volume should be increasing, and I will add to that short position. If we rotate back up, I should say, if we open lower and breadth is stronger, then that's got another key signal that we're going to be headed back up again, or in some type of pause or rotation. And then finally, if we trade through and volume increases to the upside, breadth is strong, then we're in for some type of greater degree time and price counter trend rotation with the possibility of even testing this 393 area in the spiders and potentially the 300 level, 298 to 300 level in the Qs. A little bit longer briefing today, but I want to be sure that everybody has a clear picture of what to anticipate in the market for the coming week. And just watch what happens with today's low and the June 17th lows. Those are extremely important areas. And we are at a point of being extremely oversold. So, the higher probability is we're going to see some type of pause to work that off. But if we do see lower prices, it does not preclude, just as it happened today, preclude the market from trading lower as long as it's supported by a continuation of very weak internals. Have a great weekend, and Monday should be a very, very interesting day.